Introduction to Ratio Analysis. The comparative income statement for the years ended December 31, 2013 and 2012. Comparative income statement is the income statement in which multiple periods of the income statement are dealt and compared side by side so as to allow the reader to compare the incomes from a previous year and make investment decision on whether or not to invest in the company. Dito sa comparative income statement, pinapakita nito ang kakayahan ng isang negosyo na kumita. Also, income statement help business owners decide whether they can generate profit by increasing revenues, by decreasing costs, or both. Dahil dito, masusubaybayan ng business owners and investors yung performance ng business nila, and because of that, they can make better decisions. Example of comparative income statement. Obras Corporation Comparative Income Statement for the years ended December 31, 2014 and 2013. Net sales is the total revenue less the cost of sales, returns, allowances, and discounts. The amount of total revenues reported by a company on its income statement is usually the net sales figure, which means that all forms of sales and related deduction are aggregated into a single line item. Net sale in 2013 is $3,146,400. Sa 2014, mas mataas, $3,276,800. Sa cost of goods sold naman, it refers to the cost of goods that are either manufactured or purchased and then sold. And then the gross margin or gross profit is the profit a business makes after subtracting all the costs that are related to manufacturing and selling its products or services. You can calculate gross profit by deducting the cost of goods sold from your total sales. So it means para makuha itong gross margin or gross profit, itong net sales na $3,276,800, i-minus lang natin sa cost of goods sold na $2,088,800. So kapag minus natin yan, ang magiging gross margin is $1,188,000. Yan yung 2014. Sa 2013 naman, makikita naman natin na mas mataas yung 2014 na $1,188,000 compared sa 2013 na $1,138,000 lang. Sa operating expenses naman, ito yung mga expenditures directly related to day-to-day business activities, excluding the processes involved in manufacturing a product or delivering a service. Examples include rent, travel, utilities, salaries, office supplies, maintenance and repairs, property taxes, and depreciation. In selling expenses naman are the costs associated with distributing, marketing, and selling a product or service. Selling expenses can include distribution costs such as logistics, shipping, and insurance costs. Marketing costs such as advertising, website maintenance, and spending in social media. Sa administrative expenses naman are the cost of paying wages and salaries and providing benefits to non-sales personnel. So para makuha yung total operating expenses na $924,000 sa 2014, ipag-add lang natin yung selling expenses and administrative expenses na $476,800 plus $447,200, and ang magiging kalabasan is yung total operating expenses na $924,000. In income from operations or operating income shows your business abilities to generate earnings from its operational activities. It measures the amount of money a company makes from its core business activities, not including other income that does not relate directly to everyday activities of the business. The formula is operating income equals gross income minus operating expenses. So, yung gross margin na $1,188,000, less lang natin yung total operating expenses na $924,000. So, ang magiging operating income or income from operation is $264,000. Next is interest expense. It relates to the cost of borrowing money. It is the price that a lender charges a borrower for the use of the lender's money. On the income statement, interest expense can represent the cost of borrowing money from banks, bond investors, and other sources. So, para makuha yung income before income taxes, ipagmaminus lang natin yung income from operations na $264,000 minus $65,600 na interest expense. So, ang magiging kalabasan is $198,400. Income taxes expense naman, it is the amount of expense that a business recognizes in an accounting period for the government tax related to its taxable profit. Last is the net income. It is the total amount of money your business earned in a period of time, minus all of its expenses, taxes, and interest. It measures your company's profitability. Dito mo na makikita yung mga natitira sa negosyo mo pagkatapos ng lahat ng mga gastos, including salary and wages, cost of goods or raw materials, and taxes. So, para makuha natin yung net income, ipag-minus lang natin yung income before income taxes na $198,400 minus income taxes expense na $62,400. So, magiging kalabasan is $136,000. So, as we can see dito sa Obras Corporation na income statements nila, mas mataas yung net income nila ng 2014 compared sa 2013 na mababa lang. Understanding the net income, gross, and operating profit. Gross profit, operating profit, and net income are all types of earnings that a company generates. However, each metric represents profit at different parts of a production cycle and earnings process. All three financial metrics are located on a company's income statement, and the order in which they appear help show and relationship to each other and their importance.